Good afternoon, YouTube. So, as you've seen in the thumbnail, today we're going to be going over Alibaba stock, and we're going to basically go over kind of like a small overview of the fundamentals of the company. We're going to first look at the 10K, then we're going to go over revenue over the past few years, see how revenue and earnings are growing, and then we're going to kind of go into the fines that they got going on right now with the Chinese government and look at the 5-year plan that the Chinese government has now established for many of these tech companies, which is what's providing a lot of the FUD in the market right now. And so if you do want to get my honest opinion just real fast, I think the stock's oversold, and we're going to be explaining why in this video today. So if you do like this content, make sure you like and subscribe, only if you like this content. So yeah, let's get off right from the get-go. So from the stock price, or if you look at the chart of the stock price itself for the company, you would assume this company is doing really bad right now. The revenues are going down, they're losing income, the supply of customers is going down, people are losing interest about the company. So let's look at the most recent 10Q and find out what actually is going on with this company. So as you see here on the screen, the first line that I have outlined is 34% year-over-year revenue growth. And then also we are increasing our share repurchase program from 10 billion US dollars all the way up to 15 billion US dollars. And this is the largest repurchase program in the company's history. And a basic overview, they're basically purchasing shares that they own, or the company's float that they have. So let's say you own like 1% of the company. With that, now that they're purchasing back shares, you're going to own more of the company depending on how many shares they buy back. So this is going to increase EPS, all kinds of good stuff. You're going to get more of an ownership of this company without you doing a single thing, without you buying more stock or anything like that, because they're taking less shares off the market because they're buying them back. So anytime you see that in a company, especially whenever shares are way oversold, that's really a good thing because the company's getting the shares back at a cheaper price than, let's say, $300 and something for Alibaba stock. Now we're going to go into the annual active customers, and this is Alibaba's ecosystem across the world reached approximately 1.18 billion. So for the past 12 months ending on July 30th of 2021. And then income from operations was $4.7 billion, which is insane. And then year-over-year decreases were primarily due to the investments in strategy areas and to capture more incremental opportunities. So they're investing more in the company. That way they can capture more growth, which is a phenomenal thing. Net income. This was an increase of 10% year over year, so they're more profitable. Net income is after all their expenses. And then net cash provided by operating activities came out to $5.2 billion. And this is mainly due to the settlement that they're going over right now, or the settlement that they had to pay back $1.4 billion. We'll get into the settlement that they have now, which is actually 2.8. So we all know that cash flow is a really good thing. This is basically how much money the business is throwing off for the company to invest in other companies, buy other businesses. So this was an actual bad thing. I will say that year-over-year decrease was mainly due to the settlement where they had to pay back the $1.4 billion that we just stated. And this is basically the anti-monopoly that Chinese regulations is going around. Kind of similar to the whole Facebook, Amazon thing here in the United States. And then fines and decrease in profit resulted in our investment in key strategy areas. So they're trying to capture more growth. So that is a good thing that came out of that. And then now talking about the increase in share repurchasements. The share repurchase program will be effective through the end of 2022. So as always, you want to go back over through the 10Q, making sure they're actually repurchasing shares as they say they are. But as Charlie Munger agrees too, they're a pretty safe Chinese investment. He trusts their numbers. A lot of really, really rich people trust their numbers. And they actually have American financial auditors that go through the system. So Alibaba, out of all the Chinese stocks, is the safest, in my opinion, company to invest your money in. And now a real bullish thing that I have going on with Alibaba. So as you may or may not know, Alibaba is the Amazon of the United States. And China, they have a population that is soaring. The middle class is exploding. I mean, they have so many people that are coming into the middle class now. Basically, they're making more money a year, so they can purchase more things. They can order more things online, all that good stuff. And so we have a chart here that I thought was really interesting. I wanted to throw it up. So when will China surpass the US as far as GDP, which is gross domestic product? So it has outlined here that China will be surpassing in 2026. And if you see here on the chart, in 2025 is when they're going to be matching. And then it's just like, look at the US, how it's a slow and steady increase. But I mean, China, they're shooting to the top. So this is a really bullish thing for basically any kind of Chinese company, especially like an e-commerce, something that has a huge TAM out there, and people are going to spend a lot of money on the website or whatever service it is pretty frequently. So now we're going to go over some of the statistics of this company. So shares outstanding, they have 2.71 billion shares outstanding right now. Another awesome thing, so I always at least want to see 15% of insiders holding the shares. That means basically they have trust in their own company, which is something that you always want to look for. So Alibaba, they have 26.4% of shares held by insiders. So these huge billionaires, they believe in the company, they want to own more, and they're not selling all of their shares just because all this FUD that's in the market. So now I want to point out their profit margins right now as of the most recent quarter is 19.25%. The ROA, which is the return on the asset. And just in case y'all don't know, I wanted to throw this in there because when I first started investing, I didn't know this and I had to look it up. So ROA is basically how much profit the company makes off of the assets that it puts into that. So it's a profitability ratio. So on the trailing 12 months, the revenue is 769 billion. The revenue per share for the last 12 months is $284.10. So in the last 12 months, they've made more revenue per share than the shares are actually worth right now. The last time I looked today was about $160, maybe $161 per Alibaba share. So that's one of the key indicators right there, or one of the things you can look at to kind of gauge if a company is oversold, if they're cheap or if they're not. And then other things on top of that, not just that alone, like the forward PE and price to sales, all that good stuff. And then quarterly revenue growth, as we stated before, was 34%. Now on the balance sheet, which I'll just go ahead and say, Alibaba has a phenomenal balance sheet. So total cash, and this is the most recent quarter, that's what MRQ is, 483.35 billion. Total cash per share is $177.75. So they have more cash on hand than the shares are worth also, which is another phenomenal thing. Total debt on the most recent quarter is 181.24 billion. So they have enough cash on hand to almost twofold, as you see here on the current ratio, which is 1.76. They almost have enough cash on hand to pay all of their debt off, almost double, which is phenomenal. That's an amazing balance sheet. And then the levered free cash flow for the last 12 months is 155.94 billion. So from that free cash flow alone, all of their debt that they have, they can almost pay off while keeping all the cash on their balance sheet, which is something you always want to make sure the company has enough free cash flow coming in, that if they wanted to, they can start using all that free cash flow to pay off all the company's debt while keeping the cash on the balance sheet, just in case there's more opportunities to buy out other companies, expand their e-commerce side, shipping, supply lines, stuff like that. So that's a really phenomenal balance sheet, and that's just a small breakdown. So now we're going to look at the recommended trends, some of like what the analysts have, and just ignore that the average share price of $1,700.88. Do not expect that within the next 12 months. I don't know if they're forecasting that out in the next 5 or 10 years. That is a huge jump. That would put them at the largest company in the world, which is insane. So yeah, I don't know, don't pay attention to that. But what I wanted to show y'all here is that just about every single analyst has them at a buy or strong buy. And I don't really go off of analysts that much, but for bigger companies like this, when there's a lot of FUD in the market, sometimes they can, they'll hit the news lines whenever they buy shares and stuff like that, and then the FUD will kind of die out of the market, and the share price will do what the business is doing, which is pretty great in my own personal opinion. And so now looking at some of their annual incomes for revenue, I mean, in 2018, they were looking at 250 billion, and they just toppled 700 billion in the most recent year. Earnings are going through the roof. I mean, everything is at a substantial incline. I mean, the company's growing super fast. And so I wanted to take a screenshot of this. So on March 16th, when everybody was freaking out about COVID, which was something to freak out about, because economies were shutting down for the first time in the last 100 years. That's something to really, really worry about. So you're looking at an average share price on that day of around $180. Maybe it went lower, maybe it went higher that day, but $180 whenever there was something really, really, especially in China, whenever there was something really bad for the whole world economy, you're getting the shares at $180, $181. And now those prices are about $160 a share. Got as low as I think 154, maybe even lower than that. So you're getting this company at a cheaper valuation than you were in March of 2020, whenever there was something really, really, nobody knew what was going to happen. Nobody knew that, basically the vaccine was going to get rolled out in time. You just didn't know. The economy could have stayed shut down for longer. There was a lot of fear in the market at that time. And now the fundamentals of the company have improved a lot. You're getting them at a lower share price than whenever something really was in the economy. Shutting down world economy is something really to worry about. So I just wanted to point that out. It's one of the few stocks I've came across that is lower than whenever the pandemic first came out. And so now we're going to get into the Chinese Communist Party, because it goes really far down. I want each of my viewers, if you're really interested, you should really look up these laws on your own, because it goes, you're talking about hours if you want to, of spending research on this. But we're going to go over basically an overview. So this is a 5-year plan, which is going to end in 2025. So they're kind of edging their way forward. They're not making all these laws instantaneous. That way it doesn't shock the whole economy. So basically the thing here that a lot of FUD in the market is, and a lot of people are worried, there's the increase in fines, which Alibaba has been paying a lot of fines. And that's to you to decide, do you think the leadership eventually, they're a huge company. They got that way for a reason. In my personal opinion, they're going to overcome these obstacles in the short term or up until 2025. But really, this is a short-term thing. They've got to change the company in a drastic way in a short amount of time. That way they don't catch more and more fines. So after this amendment, the penalty amount would be raised to the yen of 50 million, which is around 6.5 million euros. So we are talking about substantial raises. Before then you were talking about 500,000 yen. So yeah, substantial raises in fines or increases in fines. That's what a lot of the FUD in the market is about. And now we have Chinese fines for Alibaba of $2.8 billion for breaking the anti-monopoly law. So this is, this on top of the Chinese government increasing fines has just got this stock beating down. And I wanted to point out right here, our account done phenomenal today. We've been seeing a lot of decreases. Today we're up almost 3.99%. I'm counting that as a 4% day. Just makes me feel a little bit better. And then almost $2,000 for today. And then Alibaba here, I want to show that I do own 10.5 shares. It is basically my smallest holding, and I am looking at buying more shares. Just trying to do more research and try to fill out more of the laws. I'm still working. That's why I didn't do a whole law breakdown, because I'm still doing research on there. I just wanted to make a video about this stock. Some people are freaking out, but from what I can see so far, the company fundamentally wise, and I trust the management. A lot of, Charlie Munger, he trusts all the numbers coming back from China. And then the forward PE on this company, I think it's like 19. So yeah, as far as fundamentally, this company is super strong. So I hope y'all enjoyed that video. Kind of a short video. I've been seeing a lot of people worried about the stock as the price continues to go down, and they're not looking at the fundamentals of the company. They don't understand that they can get the same company for a lot cheaper valuation, which any long-term investor, whenever you see FUD everywhere in the market about a stock, a sector of stocks, or anything like that, the stock market in general, that can create some pretty good buying opportunities in the short term and long term. So I hope you are doing well, having a good profitable day. As you saw from my account, feels pretty good, and I hope to catch y'all back on the next video.